All right. Thank you everybody for joining today. It's 7:01. I think let's get started. So basically, I'm going to talk about being a real estate investor, and I'm going to touch a special segment on mainly the multifamily residential property. So that's what my focus is going to be in it. And that's where I'm going to focus on. Say hello in the chat. I mean, basically, I want this session to be interactive. I want you to get value out of this because if you're gonna stay with me for an hour, camera on or off from your end doesn't matter. But put your questions in the chat. Anything comes up, I will go into chat from time to time just for housekeeping. From time to time, I'll go in chat just to make sure if there's any questions to address. If you want to ask, go live and ask a question live, you can raise your hand. I will see it and I will basically then take your questions as well. No problem there. Okay, so let me just share my screen. I'm sharing my screen. I'm just gonna make it bigger. Let me just do a presentable mode of my presentation. So we're gonna go over the presentation. So, and any questions, like I said, just put it in the chat and then we'll kind of I'll go into the chat from time to time. So session is about how to avoid costly mistakes. So I'm going to touch on what a lot of investors do when they end up into real estate investment, right? So they do a lot of mistakes. And I'm going to touch on those mistakes, how to avoid them, right? And don't do the same mistakes. So that's what I'm going to kind of touch on. Also known as how not to screw it up, basically because you want your investments to be kind of done safely and it should make you money. I mean, that's the whole idea of investment. I personally am a real estate agent licensed in Ontario. I am also a real estate investor, so I'm going to touch on how I have built my real estate portfolio as well. So I have first-hand experience. So that's why any questions you have, you're welcome to put it in the chat and I'll kind of address those, right? So um, chat box is there. You can put your questions there. You can raise hand button as well as you like. Stack up those questions and, basically put it in the chat box and I'll go from time to time, like I mentioned, right? So um, I'm not sure where you are at with your journey for real estate investment. I talk to a lot of investors over time and I see a lot of people, they are confused, they are concerned, they are anxious, they are uncertain, intimidated with all the information getting at them. So that's why they ended up making wrong decisions, right? With how the market kind of fluctuated, a lot of people ended up losing money. They thought that it was a good investment at the time, but now actually it's not. But the investments I'm going to talk about, they are basically recession proof investments, right? We're talking about investing in multifamily homes in secondary markets in Ontario where the price points are not same as Toronto, right? So that's the idea there. One more thing to share, my license is valid in Ontario, so I can help anybody buying a home in Toronto, GTA. I can help you buy a home in the secondary markets, which I'm going to touch on and talk about more details, right? So my goal, basically you feel in control and get ease about the real estate investment process. That's the idea here that I'm kind of trying to achieve here. That's why I'm saying be open with your questions. If the session is more interactive, if you got something specific question going on, put it in the chat. I will answer that question and address that, right? So if you stay till the end, we'll talk about, there's some stuff I will offer you, and that's basically up to you to kind of decide on with no obligation on certain things. Okay, myself, quick introduction. Gautam Kapoor, I'm not going to dwell on it too much. I got my license in 2007. I have got over decades of experience and knowledge. I've lived here in Toronto GTA area, right? I lived in Brampton, I lived in Mississauga. Currently, I'm living in Vaughan, Kleinburg area to be specific, 427 and Major Mackenzie area. That's where I live. My office is in Mississauga, close to Square One. It's off here, Ontario, and Matheson Boulevard. That's where my office is in Mississauga. So you're most welcome to come on, sit down one-on-one with me, discuss all these things with no obligation from your end. So just to give you that idea. So I've been doing this for years and years, so I have a lot of experience and knowledge, which is what I'm planning to share here through the presentation. Big why, just a quick touch on. I came to Canada in 2001 as a permanent resident, and then, went to get married. My wife joined me from India. My kids are born here, my son and daughter. which you see in the picture there. That was my daughter's 18th birthday. But just to kind of let you know, I mean, they're both in universities now studying here. My son's at Waterloo University, my daughter's at University of Gautam. Big give. I mean, as I make money here, I try to help Sick Kids Hospital. That's one of the charity that I support. So whenever I on income and have money, I kind of pay to Sick Kids as donations, right, from my end, just to kind of share some things. My real estate portfolio. So I'm going to touch base on what my portfolio looks like right now, and how I built it. We're going to touch on that and say share more information. Top property and the picture that you see in my presentation is a sixplex. There is three units in the left building, three units in the right. There are common driveway here and with the parking at the back. So it's a sixplex that I own in North Bay, Ontario. So that's the property that I purchased about 5 years ago. Um, Positive cash flowing property. North Bay is about 3 hours from one. So, and if depending where you are in the GTA, if you're like in Toronto, you can say 3.5 hours, or Mississauga, you can say 3.5 hours drive to North Bay, Ontario. It's 400 north, you go up, and Highway 11 north. That's where you end up going to North Bay. And I'll touch on why North Bay as well down the road. But just to share, this sixplex is what I own. I purchased that for about $725,000. Good cash flowing property that I have. Bottom left is a duplex. On the left side, semi-detached home. It's a legal duplex from the builder that I purchased. So I own that duplex property, fully rented both units. Again, cash flowing. I would say positive, but yes, cash flow is not that great as the one in North Bay. So that's what I'm going to touch on. The bottom right picture is a single family home I own in Whitby, Ontario. It's rented to a single family. So that's basically another property that I own. These are some other properties I own again in North Bay as well. So top left, it's a fiveplex building, which we added to the portfolio about 3 years ago. Fully 5 units, all of them rented fully. And I'll touch on that too, like, how they are cash flowing, how good cash flowing they are. The top right, again, a beautiful cash flowing property. It's a legal triplex. Very good cash flowing. It's like a cash flowing machine, I can say. I purchased that triplex for about 475K. The fiveplex here I paid 900,000 for. The bottom triplex on the left is also again in North Bay. I purchased that for 300,000. Again, the bottom right, again, I paid 300,000 for the triplex. When I say triplex, meaning legal 3 units and fully rented. Okay. Some of the home investors, I mean, I didn't put everybody on here. I do help a lot of home investors who live in the Toronto area. Some of the pictures here for some of the investors here that I've helped them to buy real estate investment properties in North Bay, right? So top left picture is for a duplex home that one of my clients purchased for $285,000. The lady, this is the guy who lives in Brampton who purchased fourplex. He bought for 440K. Bottom left, 410K for a triplex, 547 for a triplex, and the top right is a duplex for 325K that my investor purchased, right? So that's basically the journey. And here are some of the referrals. I'm not going to read the word here, but basically everybody's happy with that because they're all making cash flow from these properties, right? So um, that's what about my investor clients, right? And I'm helping them. Sorry, I think there's some glitch here in this picture here. Just gonna refresh the screen while I kind of do that, and something looks like happened there with that slide. Okay, here we're back on. Good stuff. Okay, before I get into the market watch update and quick talk about what's happening in the market, let me go into chat. I think looks like there's some questions in the chat. These are all in North Bay. Most of them, as I said, some are in Toronto and Whitby as well, but most of them are in North Bay, Ontario, and I'll tell you why North Bay also. I've got slides that I'm going to touch on, share more information about it, right? Can you share more details about the rent or how much cash flow and what required from being the owner. Yes, perfect. That's what I'm going to be doing. Very good questions, Arif, and very good question from you, Basil. Those are the questions I'll be tackling. So just hang on tight. These will be answered in the presentation that I'm kind of walking through. Okay, what's happening in market? Let's talk about Greater Toronto Area basically. I'm just going to give you a quick synopsis. I'm not going to go into every detail on this chart. So recently we got October 2025 stats in there. I want you to pay attention to the bottom right corner here, that table, year over year summary. Sales down 9.5%. New listings are up almost 3%, 2.7% to be exact. Average price dropped 7.2% from last year. So these are comparison from 2025, exact time period in 2024. Average property days on the market went up to by 16.3%, right? So an average LDOM is listing days on the market. I don't focus too much attention on that. It should be average property days on the market we need to focus on. So this is what's happening in GTA, just to give you a comparison, right? Prices are going down, new listings are up, average property days on the market are up. So what does that mean? That tells us it's a buyer's market, right? Like basically, if you got um, your secured job, you should be buying a property now. I mean, whether you buy it in Toronto or anywhere else, that's kind of something we can talk about depending on where you are at with your real estate journey. But this is the time to buy, kind of. That's what I'm kind of sharing here. Again, on this table, I'm not going to dwell too much time on. If you come to a column called months inventory, I'm pointing my arrow there, trend. And left side is all the areas we're talking about: GTA, Halton, Peel region, City of Toronto, York region, Durham region, Dufferin County, all that. On an average, this month's inventory is talking about is 4.7. What does that mean is, if no property comes on the market starting today, it will take 4.7 months on average in the GTA to get rid of the inventory. So and that's a very good stat to look at, because anytime this number is 4 and above, it's basically buyer's market. And when it's 4 and below, then it's seller's market. Okay, so that's where we kind of tend to say, well, that's how to differentiate how it is buyer's market, because homes are sitting and we've got 4.5 or 4.7 months inventory, almost 5 months inventory we've got. It's going to take 5 months to get rid of the inventory we have. So lots of inventory, lots of opportunity, lot of negotiation points for the buyers. Month to month comparison quickly. September 2025 and October 2025, you can see the sales have dropped 2.3% compared to previous month. And price, if you look at, has also dropped 1.4% compared to last month, right? So this is month to month comparison. That was year to year that I was talking about beforehand. Okay, so this is where I've learned over that many years in the business that a lot of investors, where do they screw up? So I'm going to touch on those mistakes that they make, right? So 90% of home investors end up buying the wrong house or the wrong deal. And that's where I'm going to kind of share some of this information with you, that not to make those errors or not to repeat those errors. That's why I'm kind of, giving you that value on the webinar. Mistake number one: real estate investors don't invest in multifamily properties. So that's the biggest thing, mistake that I see. A lot of people buy, like, okay, they will invest in a condo which is going to close in 4 years from now, and you don't know where the market is going to be in 4 years. And I've seen a lot of investors who have burned their hands with that, because they ended up booking something 4 years ago, and then the market turned by the time they came here. Now they are not able, properties are not able to appraise at the value that they bought the property at. So causing it lots of issues in closing. Some people have left their deposits even. So my suggestion is to all the investors out there, we should invest in multifamily. When I say multifamily, it's basically a legal duplex, triplex, fourplex. Anything above 4 units, which I own sixplex and fiveplex as well, banks call them as commercial properties, even though they're not commercial, but they call them as commercial. 4 units and below, banks will call them residential. So just for your information, like if you're talking to a bank, if you take a duplex property to them or a triplex property to them or a fourplex to them, they will give you a residential mortgage rates. But if you are taking fiveplex, sixplex, the getting a mortgage process is different for those multiplex properties, right? Which is higher than 4 units, right? So because they are treated as commercial properties. So just I thought I'll just mention that there. So this is what they do. Like they basically stick to single family homes which have limited income potential. Multifamily properties offer more units, higher cash flow, and I'm going to touch on how much cash flow are we talking about. I'm going to share you an example with you with a property that I have, which is off market from a seller in North Bay. It's a duplex, and I'm going to share numbers for that just to go over with you. Lower vacancy risks, right? So, tip here again, diversify with multifamily properties for a steady cash flow, right? So you will make cash flow every month. You will not lose any money on these properties. Even your interest rates goes up, your cash flow will drop to a certain point, but again, you will be in the positive cash flow space all the time. And when I'm talking positive cash flow, I mean after paying all the expenses, including property management, because I've got a property manager there that we use in North Bay. We pay him a percentage of rent. He collects rent, he takes a percentage off it and deposits balance into my account. That's how he operates. And all my clients in Toronto, GTA, is working with the same property manager in North Bay, right? So my this positive cash flow, whenever I'm saying, means that is a cash flow after paying all the expenses, property taxes, snow removal, everything. So that's what I wanted to share that one thing there. Um, Mistake number two they do is they ignore cash flow generation. So they don't pay attention to cash flow because they buy single family. So there is no cash flow. Basically, they are negative since the time they buy it. So it turns into long-term losses, right? So that's the idea. We want these properties to cover expenses, generate profit month after month, positive cash flow. So what are the revenue streams from these duplex triplexes? You're getting a positive cash flow, plus you're paying your mortgage, so anything goes into principal is yours, plus the appreciation of the property when you plan to sell this property down the road, 10 years, 20 years, or you may not even sell it because it's making money for you. The appreciation is there as well. So there's three streams of money you're making from a single down payment that you're gonna make to buy that duplex triplex property. Let me just go into chat just to kind of find out, is there a separate criteria to get a commercial properties mortgage? Or if yes, there is a different criteria that banks look at. They charge you a little bit higher interest rate as well. But again, I'm going to touch on that and I'll come back and answer this question. It's a very interesting question. Yes, there is a different criteria. They look at the property more than like they will look at your credit and things like that too, but the property has to make sense for the bank to give you mortgage or loan on. They will look at making sure how much cash flow it's making, how much economic life is left of the building. So a lot of calculation is done based on that building, right? So and then yes, you will be still a guarantor for the mortgage. Your credit will come in play, but they want to basically look at the property appraisal has to come, properties, rents have to make sense, and all that's what banks look at in quite detail. Okay. All right, next question, next thing, let me just go back there. Oh, sorry, I clicked the wrong button here. Okay, I clicked. Okay, let's go back there. Present. All right. Mistake number three. But while I'm gonna go to mistake number three, let me go to the chat again. Thank you. Okay, good stuff, Tarif. Yes, that's good. Very, very good question. And let me put it out there. If you have a specific question that you want me to address, because I have first-hand experience to give you more detail, RF or anybody else on the call here, I'm gonna share my link here. Book a one-on-one appointment. It's like 30 minutes phone call where we talk about how I can help. I mean, what thing questions you have specific related to you. So that way you can book it based on your convenient time. We'll go over the questions you have, and then I can, see if, you're a right fit, and then you're able to, get these properties, you know what I mean? And then we'll talk about, more specific situation or specific questions. So I put a link in the chat for you to book one-on-one meeting. There's no obligation there. You're not signing anything. Let me make it clear. So those are the things where I just kind of help out with one-on-one call, take specific questions and answer. Yeah, Nguyen has put in very good question too. To manage multiplexes, it's a necessary to set up a business corporation or just doing it on an individual basis. Again, Nguyen, it's going to depend on individual situation. Yes, my suggestion would be that it should be corporation, because then you can claim all those expenses and everything. So, and let me explain you how I have done it, and I'll share my thing as well. But one of the mistake is here that you're putting those properties in your personal name, not putting in a corporation. And I'm going to tell you why you should put it in a corporation. That's my suggestion. But again, everybody's situation is different. If you're gonna buy one property, maybe you put it on your personal name, right? But if you're gonna buy, more properties, you're gonna grow into building a portfolio, then my suggestion is start with a corporation and then start the right structure of the corporation. Have yourself, your spouse, and then it need to be structured by your accountant and lawyer, and they can tell you what is the right solution for you to structure that. But 100% agree. I suggest always to put properties in corporation, right? That's my thought. Mistake number three here, they hire a cheap property management company, right? So I see a lot of investors, they want to save money. They don't kind of want to pay property managers. They want to pay the least amount of fee to the property managers, and that causes them issues and grief down the road, right? So what does that tell them? Basically, that they get poor management. You know, it leads to tenant issues like late rent, property damage. Unresponsive managers can result in higher vacancies, lost revenue, right? So basically, my thought here is vet property managers always thoroughly. Wherever you're investing, check their reviews, experience, references, check references, call them. Because you ask lots of questions from them, right? And understand the whole process. That's what you should be doing with the property managers, not just taking them. So I'm going to go into chat again. There's some very good questions asked. I mean, I want to address those too. Okay, nuance clear. Thank you. What are your mortgage sources when buying your first property in a corporation? What's the average property management rate? Yes, Basil, very good questions again. My first property that I bought was Triple X in North Bay, and that was just bought through a regular mortgage through the bank, right? So I just went to my bank. Basically, what I did is I own my home here in Vaughan. I have home equity line of credit, so I took money from my home equity line of credit, and that's what exactly a lot of my clients have done, right? They've basically taken a HELOC, home equity line of credit, on their principal home. They take the money out of that. If this property is whatever 400,000, so you need 20% down payment for these investment properties. So you take out, borrow 80,000 from that line of credit, plus your lawyer cost, which is another 5,000. So you pay $85,000 and then buy a property and get it going. And then with the positive cash flow, you can pay that into your line of credit, right? Monthly. So that way you're kind of, taking that, paying that back as well. And corporation is fine, and just you just need to structure the corporation through your lawyer or accountant. I can help you with that. I have, professional accountant. If you don't have one, you're looking for one, I can help you. They can set up your corporation. I just set up a corporation. Then I told the bank that I want to put this property in the corporation, and they were fine with that as long as I'm guaranteeing it personally, for because corporation is brand new. Corporation doesn't have any credit, right? So, and it's going to take time to build credit into the corporation. Until that happens, they're going to rely on my personal credit, right? That's how it's going to work out. And bank knew that I'm taking in the money from HELOC and investing, but because these are duplex triplexes with positive cash flowing, the numbers make very good sense to the banks, and banks are very happy with these properties. They are, mortgaging it left, right, and center. All banks have done it. My mortgages are with CIBC Bank. I have got a mortgage advisor in CIBC, also very much expert about and knowledgeable about these North Bay properties. The ladies here in GTA, I refer her a lot of my clients too. Or you can talk to any bank. Basically, some of my clients have gone to their own banks too. I had a client recently who bought a duplex that just closed like last month in October. He bought it. He got his mortgage from TD Bank, right? Because he's dealing with TD Bank. Previous client to that got a mortgage from RBC Royal Bank, and then another client bought a property this year only and got their mortgage from CIBC. So you can go to any bank. It doesn't really matter. What's the average PM rate? Yeah, very good question. Property management rate. How much are we paying? My property management rate, when I do the calculation, it's about 8%, right? So that's what my property manager rate is, like about 8%. Not that means that you cannot get anybody cheaper than that, but if you want quality and you good service, somebody taking care of your properties, your tenants, everything, then that's the rate you pay. It's about 8%. Okay. Do you have a holding company and a PM company or just a single holding company? I have got only a holding company, Basil, because I don't need a property management company because I'm not doing my own property management, right? Property manager I have got outsourced. So I'm using an outsourced property management company. Hence, I do not have a property management company. But yes, if you plan to buy and do your own property management, then you need to have that structure with holding company and then a property management company. But because I'm paying property management fee to a third party, a different company, hence I do not have a property management company. I hope I answered your questions there, Basil, but very good questions. I think I like that chat, because that's where you get the value, right? I'm trying to answer your questions. So again, I'm gonna put my link for just booking a meeting one-on-one, quick 30 minutes call, where we can talk one-on-one, where I can share some opportunities, give you more details about that as well. Okay. Yeah, but keep putting your questions in the chat. We'll be going back again in a little bit. Let me continue with my presentation. Mistake number 4. They don't estimate the expenses properly, right? So they overlook maintenance expenses for the property. They overlook property taxes. Sometimes management fees, like I said, is 8%. You need to put those numbers in your expenses because that's how you're going to calculate, are you cash flowing after paying all those fees or not? Insurance costs. So I put that into my sheet. Utilities. Who's paying? I need to know that. If tenant's paying hydro, then I don't have to worry about that. Hydro is taken care of it. A snow removal expense, which as landlord, I am paying a lot of my properties. Utilities are, some units are rented inclusive, but some are where tenants pay rent plus hydro, and that's taken care of there, right? So I look at every detail about those expense, and I'm going to share an Excel file with you how I kind of calculate those numbers and all with you, just to share how I do it in full detail. And there is your question, right? Newen, I think you asked not setting up the corporation. So that's another mistake I see a lot of people do. They end up buying properties on their personal name, and they do not set up a corporation. I suggest or highly recommend that you should set up a corporation. Why? Because holding personally properties can increase your liability and your tax burdens, right? So if you structure these things right, you can save tax, right? So you will not miss on tax advantages and asset protection with the corporations, right? So you should consult a lawyer or accountant to structure your investments through a corporation. That's my suggestion to you. If you need help with that, happy to chat on my personal call one-on-one with you and can guide you through the process, how I went through the process and how I set up my corporation. But the idea there is that you just, start first property, get your corporation set up, buy it under the corporation, and then build it on that. And how I built my portfolio started with one property like the triplex in North Bay. Then 2 years into it, I refinanced it, took my money out, the value it went up by, and then I basically took that equity out and I bought my next property, right? I refinanced it and put that down payment to the next property. Then again, take it out, put it into the third property. That's how I built my portfolio, right? So, and you can start with one and then continue on to second, third, fourth, because they're all positive cash flowing. Plus you get appreciation on these properties, so you basically, can refinance few years into it. Banks are happy to do that for you. Also because the ratios that banks look at are very good with these properties with the numbers, so they are happy to give you a mortgage. They even consider portion of the rental income as part of your income to qualify for a mortgage to buy these properties, right? So that's why it's kind of very important to kind of work with the bank who's kind of doing these multiplexes mortgages all the time. Okay, let me go to chat. Tax advantages are there in the corp versus personal? Yes, that's correct. There are tax advantages in the corporation. Basil, book a one-on-one call with me. I will explain you what kind of the tax savings that we're talking about, right? There's some things called depreciation. There's the different things, but we'll talk about that in our one-on-one call because I just want to finish my presentation today. But yes, there are tax advantages. Plus, there is liability things too, right? Like my properties, if you think about it, there's like probably how many? Six properties right there in North Bay. I didn't put all in one corporation, right? You can limit your liability in one corporation, and when you reach certain number, then you can start with putting properties into a second corporation. So I've got all these six properties in two different corporations in North Bay because I didn't want to put every asset into one corporation. So I have a limit set for one corporation for dollar wise. Once the amount of properties in one corporation is at that value, then automatically I need to get to the next corporation and buy properties in the second corporation. Does that not increase my expense? It absolutely does because I have to pay taxes on for two corporation, which is fine. But I think there is fees for the accountant to maintain books for two corporation, right? You have to maintain those data and paperwork for those two corporations, so your expenses become more. But from liability perspective, if something happens with one corporation, my second part corporation is protected and nobody can touch that. Any asset in the second corporation would not be touched with any of the liability from the first corporation, right? I see that as a big advantage and big, I guess a good thing for me. Um, Average PM rate of 8% of total rent for all units or the property value. No, it's 8% of the total rent for all units, RF. Like, um, so it is basically the rent, right? So that's what, sorry, where did I go? I think I clicked too fast. Yeah, here. Okay, so yeah, it's 8% of the rent, right? Monthly rent that my property manager is going to collect from all three units combined, and then he's going to take 8% and keep it there and give me 92% of putting it that back into my account. Okay, just to make it answer your question there. Okay, so what did we discuss? So these were the mistakes that I wanted to kind of highlight. Invest in multifamilies, not in single family homes or condos, especially where people have lost a lot of money. Generate a positive cash flow from these properties, right? Hire a great property manager. Pay a little bit more, but hire a better property manager than some of the property managers out there. Calculate your monthly expenses. Keep track of those expenses, right? Register a corporation. I absolutely love Nguyen's question. Yes, it should be a corporation. If you plan to be a long-term real estate investor, if you're gonna have more than one building, more than one asset under your corporation, then corporation is the way to go because you shouldn't be putting everything under your personal names. Focus on cash flow, as I said. Principal recapture, what that is, that's basically your principal payment you're making when you're paying a mortgage every month. Let's say your mortgage is $1,500. $1,000 is interest, but that 500 is going into your principal, right? Building your equity. So it's giving you that income, right? So you're making a cash flow plus you're making your principal recapture plus the appreciation. So there are three kind of money you're making out of one investment, right? That's what I want to touch on. Here's an example of calculating income and expenses property. This actually is a duplex I have off the market available to me for sale. I'm looking for a buyer for this. So just to kind of share that, it's seller's asking price is about 350 for that duplex. It's a legal duplex. It's got two units. And on the right side rent roll, it says is unit one is a two bedroom. It's paying 950 plus hydro. Second unit is paying 925 plus hydro. And by the way, those rents are below market rents, but these tenants are long-term tenants. So unit one's got a single old lady living there. She's paying no issues at all. Very good tenant. Unit two, there's two bedroom unit, single guy living there in that unit, paying 925 plus hydro. The idea is once they leave, you can spend a little bit of money, maybe paint, do a little bit of renovation, spend $5,000, and then you can jack up this rent to like almost $1,500-$1,600 per unit from this two bedroom unit. There's a double garage on the property, $600 rented per month, 7,200 per year is making. So on the left side, I'm thinking if purchase price is $325,000 and closing costs, I just put in there estimate about $5,000. 80% will be your mortgage, 260. Your rental is 29,700 per year, which came from the right side number here. Vacancy zero because it's fully rented. Both units are rented, and North Bay's vacancy rate is less than 1%. So all the units I own, no, none of the units have stayed vacant even single month. If somebody gives a notice that they want to leave, I already have my property manager looking for somebody else to join, and he's got them lined up within like a day kind of thing, right? So I don't lose rent from that perspective. And apparently, my property manager, if I don't get rent, he doesn't get paid, right? So he gets paid only on the rent collected. So basically it's to his advantage to make sure the properties units don't stay vacant. But market is so strong there, rental market, because people there want to live on rent only. They don't want to buy. And I'll touch on some slides you're going to see down the road why North Bay, what are the kind of pluses there to invest there. Okay. So here I put in property taxes, $3,070 on this duplex, insurance, 1765. That's the current owner paying that, the number where I got from. Gas charges, that's landlord responsibility, $1,400. Hydro is all paid by the tenant, so there is no responsibility of the landlord. Management fee, I talked about 8% of the rent, which is 8% of 29,700, which is 2376 per year. Water has to be paid $1,000. Snow removal, there is no cost to this because this garage tenant is a contractor. So he's basically agreed and signed in the agreement, rental lease agreement is that he's gonna take care of snow removal and grass cutting for the property. So he does as part of his rent that he's paying. So that's why there's no cost as added in here. So your expenses are basically 9611 per year. So your income is about $20,000 per year after taking out all these expenses. Now, monthly mortgage payment, this number data is about 4% interest I calculated. We got a rate drop recently as well. So number is going to be even better than this because you can get mortgage now at below 4%. It's about 1241 monthly mortgage payment, annually 14,800. And basically, you're making net monthly cash flow $432 on this property. And when you're paying what, 325 times 20%, like 32 times, it's probably $65,000 you're talking about paying plus your 5,000 closing costs. So you're paying like $70,000, but your return is about $432 per month positive cash flow. If you can save more money on your monthly mortgage payment, this cash flow will go up. Once you are able to switch over the tenants, your cash flow is gonna go up, right? So um, and if you book a call through me, I will show you some pictures of those property through that call as well. I can just, what does it look like? I've been through the property. I've met the tenants there. So I'm looking for a buyer for that property. But what I mean is this is not the only property there. There are other properties there too. But first thing I do is I do analysis on the cash flow for every property before I say, well, maybe we should go look at it, right? Because if the numbers are not making sense, somebody is asking too much money, there is no cash flow in there, then it's out of question. Um, Years ago, North Bay was very hidden market. Not a whole lot of investors knew about that market, but now a lot of people know. A lot of people from GTA have went there as well. This year itself, I've had my clients buy three properties until now, and looking to kind of have another buy a fourth one. But The idea is that a lot of people are from GTA Toronto area because this is completely hands off. Summertime you can drive. It's a day trip. You make like I do, when we go to see the property, we leave in the morning like 9, we're there 12 o'clock, spend a couple hours, have your lunch, then drive back, right? So you can come same day. It's not that far that you can't touch the property. You can drive anytime. Summer weather is very beautiful. There's Lake Nipissing there as well in North Bay, which you can see is a beautiful lake. We spent some time there as well. That's how I've been introducing North Bay to a lot of investors here in GTA. And there's a lot of now new investors have come up from even Barrie or Ellie are kind of going up there and investing in this area. This is just my kind of, last kind of slide on this part, but I'm going to touch on why North Bay, Ontario. So let's just talk about a few things there that might address some of more questions you might have. Let me just go to the chat if there's anything more questions in there. Um, Average PM 8% of total rent for all units or the property value. Yeah, okay, I answered that, Arif. That's 8% of the rent. 4% core mortgage HELOC rate. Um, Correct. The mortgage rate doesn't change for buying duplex, triplex, fourplex under the corporation or a personal name vessel. It's just the same rate like you get like on a traditional home purchase. Okay. The So it's going to be the same thing. Right now, you can even get that below 4% mortgage. HELOC is basically prime plus 1%. So HELOC rate will be a little bit higher. It's not going to be 4%. It is, I can even probably look at my phone and I can tell you what my HELOC rate is, but it's usually prime plus something banks offer. I think usually a 1%, I would think. But I'm going to give you a rate that I see on my app quickly so you kind of get the idea there. So count info. Yeah, the interest rate right now on my HELOC is showing 4.45%. Okay, so just so you know, it's a little bit higher than the mortgage rate because banks have to make money. Of course, they're there to make money, but that's what the HELOC rate is. But mortgages, this is traditional regular mortgage. Unless you go into a fiveplex, sixplex, that's when the rates will be higher. Higher by what I mean is maybe 1% higher, maybe 1.5% higher than the mortgage rate, the rate for a fourplex or a duplex or a triplex. And then still, those properties are making sense with positive cash flow, even with the higher mortgage payments with the higher rates. That's what I look for. How old is the property? Is there any major maintenance required? And did you consider major work required under maintenance? Arif, yes, I did and walked through the property. Property is old because I don't know why. I mean, these properties in North Bay is an older town. A lot of properties are built, I guess, between the 1900s to 1960s. And I don't know why they stopped after that because these are good properties. There's not a whole lot of new properties there, which might be because of construction costs and things like that, but these are older properties. But what I look at is when I look at a property to sell or a buy, I do thorough inspection with the home inspector. I put a home inspection condition as well in the offer. Then we go and inspect the property, and few things I make sure that things are updated, right? Like your plumbing, your electrical, all those things are updated so you don't have any surprises, right? Because those are key things. The insurance companies would not insure a home with aluminum wiring, right? So the wiring has need to be updated. Like this duplex that I'm talking about, everything's been updated. The guy kind of purchased this years ago. He renovated it completely and then he rented. Now he's got tenants living in. He doesn't need to update anything right now. But yes, when the tenants move out, that's part of your kind of looking when we do the quick walk through the property. We check how much money it will take to spend when these tenants leave and how much rent you can jack up. Like I will tell you on the sixplex that I'm talking about, I had a lady living in one unit paying me $1,000 rent per month, and then she kind of always decided, to leave. She left, and then I spent about $11,000 in that unit, updated the bathroom, updated lights, painted the whole unit, changed the flooring, spent about $11,000 in that unit, and the rent I got $2,200 per month, right? So my $1,200, I started making more per month by investing 11,000. So I recovered my money pretty much, right? Within, like, you can calculate within a year type of time frame, and rest is a good cash flow for me. But yes, those are the things to consider. I keep in mind that's what we will do it through in home inspection plus our walkthrough. In any properties I visit and show, I take my property manager. He's very knowledgeable because he's living there in local in North Bay. He's very knowledgeable. He can give us some ideas, some things as well, and those are the things considered. Anything coming in home inspection, we can negotiate with the seller as to either we fix or they fix those issues, so we don't have this maintenance coming down the pipeline. Very good question. I hope I answered that, but I'll come back to the questions again. Okay, why North Bay, Ontario? Number one, affordable entry point, right? Where can you get a duplex for 300,000, 400,000? Like the clients I have, uh, the guy who closed the property on duplex last month, he bought a duplex for 440,000, right? And all that's gonna come down to the property value is gonna come down to how much cash flow it's making, right? So if it's making like $1,000 per month cash flow, of course the property price is gonna be a little bit higher. This property that I showed you is making you probably $450 thereabout per month is cheap. It's listed, you could buy for 325, and maybe you can squeeze a little bit more on that price to buy that property. But if you cash flow a little bit more, you could kind of end up paying a little bit more, right? That's the idea there. So property prices significantly lower than GTA, even mid-size Ontario cities. Multi-prime family properties, 2 to 4 units of you can get under 600K, right? So very easily, right? So you don't go beyond that. And then let me explain you in comparison here. We've got a property here in Toronto. It's not on the market, off market, triplex. The contractor bought it. He renovated A to Z, got a permit, converted into a legal triplex, and we're gonna list that property soon. And you know how much is the value for that property? It's $1.8 million, right? For a triplex in Toronto, because those are Toronto prices, right? Versus you can get a triplex there for under 600K, right? Strong cap rates, and that's something, again, a discussion that we can have on one-on-one, like, how to look at cap rates. There's, calculation behind that. I can explain you all that. Strong rental demand. There's university there, there's college, there's a lot of military personnel there as well. There's healthcare workers there, there's local businesses there. All those employees working at businesses tend to live. So there's a lot of demand for rental units, and nobody there want to buy those properties. So it's kind of strong rental market. Rents on, like, for example, I'm telling you, like a two-bedroom home, you can get easy rent for 15, 16, $1,700, which is like equal to rents here, right? If it's a three-bedroom unit, you can go over 2,000, like 2,100, 2,200, 2,300 even. If it's a three-bedroom unit, you can get a rent. Rising rents, low vacancy rates, typically under 1%. Demand outpaces supply because there's a lot of demand. That's why low vacancy rates. And driving steady rent increases. Definitely, it's happening over the years. I have seen that. I tend to wait on sometimes. Some of the tenants are paying very low rents because they've been living there for years and years. But as soon as they move out, it's good. I can jack up the rent to market price, right? So cash flow positive from day one, you are making money. That's the idea here with these positive cash flowing properties. You're not losing money, you're not negative cash flow, you're not putting money from your pocket, you're making money. Even like this duplex, if you're, getting 400 plus dollars, put that 400 into your HELOC and get rid of your HELOC, because that's the idea there. And it'll save you from taxes as well, because you're paying the expenses you borrowed from your personal home. Now you're just paying back to personal home. So there's a lot of ways to do that through accounting and stuff like that, which I can walk you through the call again. So my idea is basically book the one-on-one call, and which where we can chat. I'll put in the link again just in case somebody missed it. Just basically my website /book, and just book that 30-minute session where I can share more information. Any specific questions you have, any questions you have from your financing end, I can tackle those as well. Stable economy there in North Bay, like there's like education, healthcare, military, tourism. landlord friendly regulations because there are multiplexes there. Landlord tenant board rules are much better there versus in Toronto because I have properties in Toronto as well, right? Like I shared. And I've been through LTB hearings and all that for Toronto versus LTB hearings in North Bay. Much easier. The rules are more landlord friendly up there versus in Toronto because Toronto is more driven where these LTB hearings are more tenant driven. Okay. Upside potential, there is always renovation value add opportunities. If it's a duplex, you can convert into a triplex, add a unit, make more money, appreciate it in value. You can do all those conversions are very popular there. Utility separation, you can add extra gas meter, extra hydrometer if you need to, so the tenants can pay their own hydro, so you can increase your net operating income. That's the idea there. Limited new supply, as I mentioned already, most of these properties are older, but I do make sure that they have been renovated to a point at least that those critical infrastructure things in the property are there. So there's no structural issues and things like that. If there's structural issue comes on a property, we walk away from the deal, right? That's the idea there. Sure. Um, Let me just go. Okay, I think we're best fit for investors focused on cash flow, not just appreciation. Buyers priced out of GTA can invest in here in North Bay, no issues. Their owners willing to self-manage or hire a local property management. It's good for people who want to self-manage as well. If you tend to do that, you can do that as well, right? So here is what I'm going to share in the graph, right? So this is what, I mean, the graph I could get from North Bay board. But if you see from 2000, it was pretty stagnant until like the increased price property prices were like you can get things in $100,000, $200,000 until like COVID hit. And once that COVID hit in 2020, 2021, the prices start to shoot up big time, right? Even now we are in recession in Toronto here, but in North Bay it is not recession. Yeah, there is a recession you can say for single family homes there because there are single family homes there in North Bay as well. People do live in single family homes there too. But for these duplexes, triplexes, fourplexes, always in demand. There's good cash flowing. It always sells, no issues at all. If you got something coming, if it's positive cash flowing, you're not in a rush to sell. If you get the good price, you sell. If you don't, you don't have to, right? That's the idea there. Months inventory, very low. I mean, if you talk about North Bay, I was talking about 5 months inventory here in Toronto, but in North Bay, it's pretty much, 2.5 months inventory, right? So that's where it's kind of a best area. Here's again, I'm putting QR code on there to book a meeting if you want to scan with your phone, and then you can just get access to my calendar where you can just book that no obligation call, and I can help you with any specific questions for mortgage, lawyer, accountant, anything you need. Happy to help there. Are you familiar with Smith maneuver and do you do it? Bessel, I am familiar with it, but I am not doing that right now because that would work more if you have a property, investment property in your personal name, right? Because if you have it under corporation, it's probably not going to work from the limited knowledge that I have, but you're happy to explore that. But if you buy a property in your personal name as an investment property and then you can do the Smith maneuver with that property, yes, there is an opportunity there. You can make more money for sure. Cap rate is still much lower than 1% rule from your experience. Is the appreciation rule going faster than other cities in Ontario? How fast is it to sell to exit if there's a need? Yeah, very good question, Ewan. I would say book a one-on call. I'll kind of share some more numbers with you. What kind of appreciation is it? Like if you look at the graph, like I kind of shared. Sorry, I'm just gonna go back to my slide here. Like if you think about even looking at this graph, property values are like gone from, I don't know. I mean, if you look at in 2020, the price was like, I don't know, close to 250 and now it's more like 450. So, and you can calculate the numbers yourself from there, and I can even share my numbers when you kind of schedule a call with me. I can share some of my properties numbers because I had a property which came up for renewal also because it's been over 5 years. I've been owning some of the properties. So for the mortgage renewal, and I'll tell you how much did they appreciate, right? My triplex I bought for 300 and bank appraised for 500K in 5 years, right? It's basically appraised for 200,000 over, um, you know, the price I paid, right? Over 5 years, and you can divide that over 5 years. So it's a good kind of percentage. I'm just trying to see. Sorry, I'm trying to calculate here. 200,000 divided by, let's say, even 5 years. So it's like $40,000. So 40,000 per year in appreciation over a $300,000 property times 100. It's about 13% is what I'm kind of sharing from one of my triplex property. Does every property does 13%? Maybe not, but let's be even conservative a little bit. And let's say even it does 5% minimum, right? You know what I mean? It's all gonna depend on how soon can you sell. It's gonna depend on, again, how much cash flow is in the property. If it's a good cash flowing property, you can sell it like that. I had a property come in North Bay, just sharing some experience here. It was fourplex property listed for 699. I had a buyer for it. We went in competition. We put in an offer for 710, and we did not get it. The property got sold in 1 week for 750,000, right? So because it was very good cash flowing, I think the cash flow monthly was over $2,000, right? So, but somebody paid 750 for that, and good for them. But what I'm saying to you is it gets sold in 1 week if it comes to that, right? It all gonna depend on what is the asking price, what is the cash flow. Do you have more listing with breakdown which you showed? If you can share on an email, please. Um, Arif, first I want to discuss one-on-one with you. If you can book a call with me, I want to see where you are at financially. What is your financial situation? Then definitely I could do that. I can do more properties breakdown. But for me to, do a breakdown and some of the things I'm doing today, property might sell tomorrow, right? So there's a lag in it. But I want to basically have that one-on-one discussion with you to see financially what kind of capacity do you have. Some of the questions I will ask you in that meeting, which will tell me, yes, you are a right fit for these kind of properties, because it's not only like I'm trying to push these properties on people. I mean, these need to make sense to you from your kind of wherever you are at with your journey, depending where you're living, where you're working. So those are the things we discuss on one-on-one call. But definitely I can, prepare more breakdown of the numbers and share through email. Absolutely, I can no issues at all there. This one that I shared on the presentation, I can, even email. This property is off market, so that's why it's not going anywhere. That's why I'm happy to share the numbers, no problem, because my seller deals with me, right? So, but the other ones, I don't control the timing depending on how good the numbers are. Some of the property can stay in the market for like 1 week. Some could sit there for 4 months, 5 months, if some of them not making any sense, right? And I've seen the properties over the years. Some people are stuck on a price and the cash flow is not that great, then they will sit on the market for longer, right? They'll be sit on market for months and months. So there's a lot more listings available still, but these multiplexes are selling faster because if the property numbers are making sense, everybody wants to jump on those because these are the prices you don't get here in Toronto, right? That's the idea there. And my process, just to explain you, for somebody to buy, um, is basically I kind of, do the numbers first, share the numbers with you. You calculate the numbers. We take a look at it. If the numbers are making sense, then we kind of, go to the next step. We might put an offer and secure the property conditional on our visit, financing, and inspection. Once we can sort all those things out, that's when we drive up and take a look at it, make a day trip, take a look at it. If you want to proceed, then we remove conditions one by one. That's what we do. Uh, what's the realtor fee? Realtor fee is paid by the seller. Whenever you're buying a property, you do not pay any realtor fee. All the realtor fee is paid by the seller. I don't know what you mean by cashback. Yeah, I mean, when you get a mortgage, there might be an offer from CIBC was offering some cash back there, if that's what you mean. I'm not 100% sure, Arif, what are you talking about on the cashback side of things? But when you're doing a mortgage, some banks do offer cashback as well as part of getting a mortgage with them. CIBC had that program going on. Is it in place right now? I don't know. It was there about a month ago when I kind of was speaking to them. You will get a cash money from them as well. That's what happens. But typically, my compensation is paid by the seller. You are not kind of paying me. I'm basically representing you, but I am getting compensated by the seller. That's how I kind of get paid, right? So that's the idea there. Any final questions? I know that was a long session. It's 8 o'clock. It's been an hour. I did provide value. I hope you got some value out of this session here. I'm gonna put in the my link again here. Book. There is no obligation. We will just chat one-on-one, and I will explain you in more detail. Any questions one-on-one we can talk about. Some people are kind of shy on the call, but if we bring up the questions on one-on-one call, happy to help with those questions and then see if you are a right fit for these properties and then how we can move forward to next step. Okay. Yeah, thank you everybody for spending the hour with me. I mean, that was the value I wanted to provide. I hope you got some knowledge out of it. A lot of my new investors are kind of starting all from Toronto. They starting with first property buying in North Bay. One of my product client actually has bought four properties there because he started with one and he said, yeah, it's making sense. Then again, he refinanced like the strategy I talked about. Then he bought a second property, a third one, and fourth one. He owns four properties there. He's using same property manager. But then I have other clients who have started with their new properties as well. All these properties people have bought this year have bought as a first property, right? Living in Toronto, right? Like I had a guy, single guy living in Toronto. He bought a property there. He's living on rent here in Toronto, but he said, yeah, the investment it makes sense. So he bought a duplex there for 310. Oh, not 310. I think it's 410. Sorry, 408 500 is what he paid to be exact for a duplex. The other guy paid 440
Hmm?
for his duplex, so that's what happened.
Lucky.
If anybody wanna come off mute and wanna ask any questions, I can stay here for a few more minutes. Otherwise, thank you for your time today. Okay, I guess thank you very much. I mean, all right, everybody, and looking forward to talking to you through the one-on-one call. Take care, all the best. Good night.